Hello, everyone, and welcome to another episode of How to Sell Your Vision. My name is Moti Elkam, and I'm the host of this podcast series. As always, this podcast has one goal in mind: to bring you powerful insights from founders who successfully raised in today's market and from VC partners who will share what it takes to convince them to invest in your vision. And today I'm super happy to host Ron Levin, who is the managing partner at Alumni Ventures. Now, what I love about Alumni Ventures is that, one, they were chosen by Inc. as one of the founder-friendly VCs in the US. More than that, they are one of the top 100 active VCs in the US. So unlike a lot of VCs that are out there, there is a lot of traction, a lot of momentum, a lot of movement in Alumni Ventures. I'm going to let Ron tell us all about it. Ron, thank you so much for being with us today.
Thank you, Monty. Appreciate the opportunity.
Absolutely. So Ron, you have quite a unique perspective as a managing partner at a VC. You're also a founder, so you've been on both sides of the table. So why don't you share with us first a bit more about Alumni Ventures and your experience?
Absolutely. Alumni Ventures actually got started about 10 years ago as a platform to democratize venture capital as an asset class. So make it accessible to any individual accredited investor who wanted VC as part of their investment portfolio. So what we do is we build well-diversified venture capital portfolios where we co-invest alongside the leading venture capital firms in the world to get individual investors access to the same incredible deal flow that leading brand name VCs have been participating in for years, for decades, but it's been relatively inaccessible to most investors. If you're not coming with a 5, 10, $50 million check, you're not going to be able to access most of these top tier VC funds. Many of them, even with a big check size, you still can't get access today
Right.
because they have so many well-established LPs at this point. So we're really trying to make the asset much more accessible to investors. And we went to market with a community of different funds under a single umbrella. So think about us like as a venture capital firm with many funds under an umbrella. So we have funds that connect to university alumni communities, which is where the word alumni comes from. We have about 30 different university alumni communities that we partner with. And then we have other funds that are not affiliated with any university, but are more focused, for example, on a specific sector like deep tech or AI or health tech or a women's fund. And in my case, I run a seed fund, which is a sector agnostic, highly diversified pre-seed and seed venture fund. But we're actually now the most active VC firm in North America. So we've grown very quickly. We make about 250 investments every single year.
Oh, wow.
And currently have a portfolio, or we've invested in around 1,400 companies at this point. So managing a very active portfolio where our staff is over 100 people across 5 offices in the US. So really very active, but it's not just about quantity. Also, we think our model of co-investing alongside the top brand name VC funds really works for our model, as we've also been ranked in the past year by CB Insights as one of the top 20 VC firms in the country, and the only one of those firms that works with individual investors. So we're pretty proud of our positioning, a little bit of a different flavor of venture capital, but I'm really excited about what we're doing.
Definitely a different flavor, and it sounds fascinating. So, Ron, if you don't mind, let's kind of dive into the conversation, and the reason we are here today is to share your insight with founders who are coming to pitch in today's market. And as I said before, you've been a successful founder. You're now on the other side of the table. And I'd love to start with one question, which sometimes it is the toughest question to ask. If you had to share one piece of advice, one tip, one crucial insight with a founder on his or her way to pitch their company and vision, out of everything in your wealth of knowledge, what would that one insight be?
Yeah, that's a really great question, and I'm not sure I have an answer that's exactly one size fits all. But I do come across a lot of very early stage founders who might be their first time raising money for a startup, not really sure exactly how to go about it. and thinking, boy, how do I make inroads with a professional VC investor who I've never maybe met before, and I think there are ways to do it. And when I first raised money for my startup, I raised money from a combination of people I knew and some people I didn't, and just kind of built relationships. But at this very early stage, it really is about building a relationship and finding someone who either shares your vision or at least likes you enough to trust you to at least write a small check to get things going. And so I tell founders, I mean, always try to establish a personal relationship. If that can be done through a warm introduction, that is always head and shoulders the best way to get in front of another investor, especially a VC. Do anything you can to find a mutual connection who could potentially introduce you. But I understand that not everyone comes with a big Rolodex and is immediately well connected, or comes from a pedigree kind of Ivy League background and has all this privilege, right? But there are other ways to do it, and I think it's a matter of if you're going to send a cold email out with a pitch to try and get someone's attention, really try to form a connection. And yeah, you can send a lot of emails very quickly. Anyone can do that. But if you take a little bit of extra time to really get to know the person you're sending it to, one, to identify, does this investor invest in what I have? Does the sector fit? Does the stage fit? Does the geography fit? I'm not going to be wasting their time and wasting my own time, reaching out to someone. And then really try to understand. I mean, everyone kind of has like a social profile that's kind of out there at this point, where you can go and look someone up through their LinkedIn or whatever else it is, and find what makes them tick. Is there a sector that they love? Do they have a hobby or an interest that they love, or something that they're passionate about? If you were to Google me, for instance, you would see that I've published a book on impact venture capital, and can you connect that to your outreach to me? If you were to Google me, you would figure out that I'm a big traveler. I've been to over 140 countries. Can you somehow incorporate that? Find a hook. Do something to get my attention, because I, as a VC, get so many pitches every single day that I just can't filter them all. And I may be missing some good opportunities, but I just don't have the capacity for it. If you can quickly come in and grab my attention, show me that you've done your homework, and try to figure out some way of connecting with me, that's what's going to capture my attention and make it much more likely that I'm going to respond to you.
So actually, I love what you're saying. It actually starts with the outreach, right? Go above the noise, figure out what ticks me, try to find the commonality between you and I, and then try to establish a relationship rather than dumping your deck at me with any cold intro email or a cold email.
I think so. Yeah, there's a lot of great ideas out there, and a lot of, I think, entrepreneurs just assume that an investor will immediately get it. Like, aha, yeah, you're right. This is a great idea. I've never thought of it. This is such a new approach. But there's a million different problems that can be solved in the world, and not every investor is going to be thinking the same way you are or have the same intuition that you do. You might get lucky. There's sometimes serendipity where you happen to connect with an investor who also shares that vision. But I think at this stage, they also want investors like me understand the idea might actually pivot in the early years. I had that experience when I was a founder. I raised money and then we pivoted and figured out what our product market fit would be. So I think we just really want to connect with people. Say, is this person someone I jive with, someone who I think I could work with, and someone who could execute, really well as we try to figure things out in the first year or two.
Now, is that piece of advice transcends to the actual pitching as well? So let's say I've done the outreach, connected on LinkedIn. You said, okay, Moti, let's go, let's meet. Does that same advice goes to the actual pitch, or is there something else that you're looking for in the pitching process?
It certainly helps to form that, but beyond, after the first 2-3 minutes, you're going to kind of get beyond those kinds of pleasantries, and you're going to get into some more meat of the discussion. And I want to see, like, I like to get a pitch done in 30 minutes. I don't like to schedule an hour as a first pitch because I don't want to waste their time if it's clearly not a fit, or my time. So I want to see, a really succinct kind of presentation that covers all the bases. What's the product vision? What's the go-to-market strategy? Tell me about you and your co-founders and the rest of your team, what you're planning to do with the funding that you're going to raise, what other investors have committed or are you talking to that you can share. Give me the whole download as best you can in about 20 minutes or so, leaving some time for a little bit of Q&A. I think good founders it's just as valuable that you can communicate as you can build a product. So I want to see a little bit of all of those skill sets come out in kind of that first pitch.
Interesting. And if I heard you correctly, you said that you're more involved in the seed fund. So you're really coming in the early stages of the company where sometimes all they have is a vision,
Mhm.
and the product, if any at all, is not mature enough. It's not even in the MVP stages. Um, how critical is storytelling and hooking you up to their vision in those early stages?
I think that's really important because I want to see the passion, and I want to come away from the call understanding why there's a problem that no one else has solved, and why are you going to do it in a way that's different. And I see, it's so important because I invest across many different sectors. There are things like, enterprise software, consumer, certain sectors that are pretty easy for me to grasp. And then there are things that are actually very technical and maybe beyond my education, my background, things that are more frontier technology, biotech, that get very scientific. I want to see that someone who's obviously very brilliant, in a science lab, who maybe has a PhD from a top school, has worked in the best labs and all of that. Yes, clearly they're brilliant in that respect, but can they also communicate the story? Because they're going to also have to build a team. They're going to have to build, hire sales leaders and motivate them. And so I think the communication aspect is really extremely important, not just for the technical fund, really for everyone. I want to come away, one, feeling good about this founder, that I feel like I've developed a little rapport, even in a short amount of time, and two, that they're going to be a great salesperson for what they're doing, because the CEO is ultimately a salesperson, even if you have a technical background. So storytelling is exactly what you're doing.
Got it. Got it. That makes perfect sense. Moving to the other sides of the pitch, as you go through the numbers, the financials, the projections, the product, go to market, do you have some kind of red flags that you try to spot during a pitch where you tell yourself, okay, I those are the key questions that I like to ask because they can easily raise some red flags as if that will indicate if the founder is really the kind of founder I'm looking for.
Yeah, there are certain things we look for. So we kind of use a scorecard methodology of evaluating our deals. And so, there are some companies that will have very interesting technology and IP and all of that, and there are others where maybe less of that, but you you really look for the team. I generally prefer to invest in experienced founders who've either created another startup, have been kind of on this entrepreneurial journey in the past, hopefully with some success, so that they know what they're getting into. I like to see, um, you know, hopefully some industry sector knowledge to show me that they really understand what they're talking about. So sometimes a bit of inexperience can rub, not really instill a lot of confidence. I want them to be able to talk openly and honestly about competition. I mean, I don't necessarily think every company that pitches me is the only company that's ever thought about addressing their problem. I'd rather have a frank discussion about, okay, there are others out there doing it. What are you going to do differently? How are you going to think about that? And just, I think there's also like a little bit of a sweet spot, kind of a Goldilocks zone of being optimistic and ambitious versus, but also not getting carried away by it. I spoke at a conference last week, and after I spoke, I had a lot of founders kind of come up to me and start pitching me, and and one of them was kind of saying, "Oh, but no, we're going to be a unicorn. Like we're blah, 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 blah." I'm like, "What? One step at a time. Like, let's build an MVP first, and then we'll worry about becoming a unicorn down the road." But so I just want to see that they're mature enough, and they have some wherewithal, to think step by step about how they're going to achieve their goals. So I think just kind of ambitious but also realistic kind of a plan is usually what I like to hear.
It's amazing that you're bringing it up. I was at an event as well a couple of weeks ago. It's one of those speed dating pitching events, and the founder came on and said, "Look, this is a total available market, and we're going to take every single part of it." Now, one of the VC partners at the event said, "Well, that means you're going to become a monopoly." And that really got the founder kind of in a state of shock because you realize that even the biggest companies on the market today, they don't hold all of the TAM, right? Google, Microsoft, they don't hold all the market share. So you can't really go after it. And it resonates a lot because I think that there are a lot of founders out there who are still telling themselves, I need to show this massive, explosive opportunity to the VC. Otherwise, they're not going to invest in me. And you're saying, look, walk this fine line between optimistic and realistic. You have to do the dance the right way.
Exactly. Yeah, I mean, VCs don't like lifestyle businesses. That's kind of a four-letter word. So I don't necessarily get excited by a seed stage company that's going to grow by 50% in year one. Like I want to see like growing by multiples early on that's possible, and I want to know that there's a way to get there. But also, I don't see going from 100,000 ARR in year two to 10 million in year three. Like that's not also like a you've probably never done that before if you think or if you have you probably don't need my money so I just want to know that the founder kind of has their head screwed on straight as they're thinking about how to grow a scalable business but not one that's just like come on guys let's get real here
Yeah.
so.
No, I hear you. But on the other end, again, as a seed startup, you carry on a lot of assumptions with you. And you have to communicate those assumptions, whether they are financials or go to market. So assuming the founder is experienced, they may bring some more validity to how they reach those assumptions. What makes you feel comfortable about assumptions that are presented to you?
Yeah, it can be pretty tricky to be honest. If I'm investing in something that's pre-revenue or maybe just has like an early pilot, like I really have no idea.
Right.
I do kind of want to hear from the founder how they're thinking about it, why they think it's realistic to get there. Like, are they actually having conversations with some customers and what kind of contract value might that lead to? I'm not going to necessarily maybe I shouldn't say this, but hold their feet to the fire if I, 6 months down the road, if we look back and say, okay, they didn't quite hit their projections. Like I understand it's not always a straight line, up and to the right. And you kind of are sort of figuring out your product market fit in the early days. And, but I want to know that you're like learning from the customers that you talk to. How are you going to, improve the product plan? Are you selecting the right target customers? I think the first year is really kind of about learning if I'm investing at a growth stage, and I certainly have experience, investing at later stages as well, and post revenue and all of that. Yeah, I want to I want to dig into the numbers obviously a bit more at that stage because then you're kind of investing off of a projection of growth and all of that. Um, but I think again it sort of comes back to being realistic because if you do overset expectations, any investor can look back from a prior investment and say, hey guys, you are like way off.
Right.
What the heck happened here? And maybe there's a reasonable explanation, and it may have been a macro factor, whatever. But you better have a good explanation if you're going to go back looking for more money as you grow. So that's why I do think it's also important to have some kind of plan that's reasonable about how you're going to get there.
Got it. Um, Ron, that was phenomenal. I really enjoyed everything that you shared with me today, and I'm sure the audience will appreciate it as well. I can just tell by your energy why Alumni Ventures is chosen as one of the friendliest investors in the US, aside from being the top 20, and congratulations for that, and being one of the most active VCs in the US. But I really appreciate the genuine uh, energy and delivery that you brought to this session, and I appreciate it.
Yeah, my pleasure. And I think our role with founders is to be sort of like a helpful aunt or uncle, more so than looking over them. We're actually not lead investors. We don't take board seats, so our role is not necessarily to shift a company's strategy, but we are here to be helpful. What we do bring that's quite different is really the biggest network of any VC firm. We have almost 700,000 people that are opted into our community that get our newsletters, follow us. That's a lot of people we can potentially help make introductions to and just I think that's why we're considered helpful. We try not to get in anyone's way, and we're just here to be a supportive partner. So I think that's how we like to be thought of by the founders that we work with.
And that's a phenomenal message to end the conversation with. And to all the founders who are listening to this, I highly encourage you to look at Alumni Ventures, look into Ron's profile. I'm sure he'll be more than happy to receive your outreach, and wishing everyone a very successful 2025. Ron, thank you so much.
Thank you, Moti. Appreciate it.